Thanks, Nehi. We have joining us Geoff, independent emerging markets commentator. Geoff, the US is, I think, all set to shut down in next couple of hours. What could be the impact for some of the emerging markets if that happens?
Well, I think first of all, it clearly depends on how long the shutdown is, and things will be complicated by the fact that a lot of the data will get shut down as well, and therefore we won't really have a very good read on what's happening with the US economy. I do expect the Fed to cut interest rates one more time in the fourth quarter, and I don't think the shutdown will have much impact on that, or indeed the lack of official data. But the history is that typically the shutdowns, as long as they don't last too long, don't have a dramatic effect on the economy. So I think it's disruptive politically. How much it'll have on the economy long term is probably limited. Now, if you put all that in context, I still think the driver here is the lower dollar. Dollar's leveled out at the 117 euro, 118 euro level recently, but I think it's going to continue to go down, particularly as pressure continues on the Fed to reduce interest rates. And in that situation, I think as we ride through this shutdown, however long it lasts, there'll still be a tendency for a weaker dollar, and I think emerging markets will do quite well out of that. So I remain reasonably constructive still about EM at this point.
If the shutdown is going to be extended like we saw in 2018-19, do you see a significant impact on the US economy because of that? And as a result, will the commentary by the Fed may also change?
Yes, I think that's right. I mean, I think the biggest risk for the economy, frankly, from the shutdown is going to be if Trump carries out his threat to potentially furlough, perhaps permanently, as much as 750,000 public sector employees. In other words, what he's been trying to do is to put pressure on the Democrats to come to a deal on a continuing resolution by threatening an enormous new round of cuts in government employment. So if it does last a long time, this shutdown, and if Trump delivers on this threat to cut the size of the government labor force yet again by a large amount, I think that will put some downward pressure on the economy. These sort of government permanent job cuts didn't happen in previous shutdowns of the government. But if they happen this time, it'll put downward pressure on the economy. And I think then the greater risk is that the Fed will cut more than once over the rest of the year. We could get two cuts, and we may get cuts heading into 2026. And as I say, the impact of that will be almost certainly to keep the dollar generally on the back foot, moving lower as we go forward.
Right. But Geoff, everyone's wondering, when is gold going to recede at all, if it will? Because looking at all the ongoings in the world, it doesn't seem like it's going to come down in any hurry.
No, I mean, I think there's a lot of things going for gold. First of all, at the moment, given that the dollar is not viewed as much of a safe haven, and I think the evidence this year is it's not a safe haven, it's down, the trade-weighted dollar is down about 12%. Also, there's concern about inflation, which is typically when you buy gold. And certainly in this sort of uncertain global economic environment, particularly obviously with the extraordinary number of tariffs and the tariff changes, the announcements, the withdrawals, the re-announcements, etc., all of that, I think, contributes to a desire for investors to get into gold. And so, again, I think it'll be choppy, but I think the trend is still upwards for a while longer. Don't forget also that the gold price is measured in dollars. If the dollar itself goes down, that alone will produce some upward pressure on the gold price. So I don't see there being an obvious top right now, even though I think progress of the gold price upwards will be erratic, and it will probably be relatively slow.
All right, Geoff, we'll leave it at that. Thanks so much for joining us. We'll let you